Come on in, folks. We'll get started in a little while. Just watching the action. We just had a wicked high volume reversal and a big push up. And now it's run into some liquidity up there. I'm just kind of watching it. Been some great action to watch. Look at this. It's definitely not something you want to just dawdle in. You have to be really, really, you have to have a conviction about a position very quickly, like that high volume reversal. That was news related. And when those happen, that's as good as it gets. That's one of the best ones I've seen recently. We'll talk a lot more about these and those, but whenever you see a lot of momentum going one way that just literally stops on a dime like that, that is the beginning of oftentimes a high volume reversal, which is one of my favorite setups. I'm hearing an echo at your end, JVC. Now it's cleared up.
Oh, okay. Random internet noise, I'm guessing. But anyway, yeah. Good morning.
Hey, good morning. Or wait a minute, somebody else unmuted. Maybe that's the problem.
Nope. I checked on that. Yep.
Yeah. Anyway, this high volume reversal we just had was absolutely crazy. I posted an image of it because when I talk about setups, I really want you guys to look at that one because it's just perfect. This was it right here. We look at this downward momentum that just slammed in both ES and NQ. It slammed right into demand and literally just turned on a dime. I mean, look at that. We came down from 12 to, almost big fat whole number, about 01, and then turned and went immediately back to 08. And that was just beautiful. Unfortunately, I did not trade it. I was having coffee when it happened, and I had my hand on my coffee, but I wanted to share that example because that's about as good as they get for high volume reversals overnight, particularly.
Seems like there's a lot of liquidity at the extremes.
There is, and this is a crazy environment. We'll talk a lot more about that, and we'll talk the Ides of Monday. I'm gonna elaborate on the hedge fund call, and
I'm very curious about that.
Yeah, that was very interesting because basically, it's the theme is everything just changed, and I totally get it. That just all of the events we've been waiting for, to trade anything have all, suddenly come into play. Gold's up, oil's up, all the indexes are crazy volatile up and down, but, mostly down. And that's creating a risk off environment, but there's also a lot of opportunity that's sort of risk on. So check out the VIX futures. Still can't get much above 30, which means nobody's really freaked out here. But anyway, we'll talk a lot more about that at the Ides of Monday session. Anyway, let's see. We still have about 4 minutes, but look at this getting sold up here. This is very interesting. This could be a trade right now. That could be a short right there. Let's reset that. I might take that trade. It could also be a trap, but it looks like a decent spot. I'm going to watch it for a second. Yeah, no, that's too trappy because of the ledge, so I'm not going to short it, but it certainly has potential back down to 17 and a half from here. Anyway.
Maybe post ledge break.
Yeah, post ledge break will be the time to do it. We've had right now the direction's up and the momentum's pretty strong, so I don't want to get in front of that. But this is the first time in this momentum move where I've seen significant supply coming in right at the top. People have been pretty much getting out of the way, and there it is. I said, what did I say? 17.5. It just traded to 17 3/4. Oh shit! So this is a really good example of how valuable it is to just watch the market and talk about what you think you should do, even if you're not doing it. In that example, I decided not to take the risk, but it did exactly what I expected it to. We had come up really strong, and then we just stopped. And when that happens, the chance for at least a few ticks on a high volume reversal is really high. And in this case, it turned out to be right down to the next quarter at 17 and a half. And remember, quarters are just the way humans divide things up. This has been going on in ES for as long as we've had the instrument. The levels that trade when it's volatile, particularly overnight. 0, 0, 2.5, 5, 7.5, and then 0, 0 again. That's the quote unquote quarters. So we just saw that. We were at the 22.5 quarter. We saw some supply up there, and we instantly dropped to the 17.5 quarter. And that's what you would look for. Maybe a pause at 20, and it kind of did that, but it plowed right through it. There was just too much selling. So that was a really good example of that.
You just touched on something really valuable. I'll just say this real quick before we get
everything
going.
I touch on is valuable.
But particularly valuable, let's put it that way, which is just the talking out loud part. We've talked about this a bunch in TRG, and it's one of my favorite sort of soapboxy things to get up on and start talking about, because it's so powerful. It's really different if you just sit here and watch and think and just talk to yourself in your head versus if you say the words. Sit here and narrate. Imagine you're a sports announcer or something.
Yeah.
And you're having to do the color for the market. Like, seriously, I do that. I mean, it's a lot easier if you're alone. I understand it might be a little weird if you're in a coffee shop or you got lots of people around you or whatever, you're at work. But seriously, if you can, sit here and narrate what you're seeing and just over and over and over and over, and you will be shocked at how much you improve at your skills of reading by saying it out loud.
That is very true. It's you're teaching your brain, and
totally.
You just saw a perfect example of that. Where it came up here and there was a good setup, and my discretion said, you know what, that's not worth the risk, because we could blast through that ledge like we're probably going to do right now pretty easily. But the setup was there, and just seeing the setup and seeing it go exactly to the quote unquote target that I would have looked for if I did take the trade, and seeing it work, that's reinforcing my ability to see the setup and interpret it properly. And you never stop doing that. You have to constantly do that. The reason we call it the Ides of Monday is because even after just not doing it for Saturday, the day that we're closed, you get rusty. Your skills aren't as sharp. So, by the way, we're about to get a ledge break here. By the way, ledge breaks are not as profound during the overnight, and they're not as likely. It's not 99%, but it's pretty close. This one, the ledge is 25 right now, and the odds are pretty good it's going to go, but we're a little too far away from it for overnight right now to go up and get it. There we go. If we get a little closer, now it's going to go. So what's going to happen is everyone's going to sell into 25 thinking, oh, that's the top, and then all it's going to take is one big trade to push it over, and we'll probably go to at least 27.5, which is the next quarter. How about that? So let's watch it. And it may not do it, on the first try, which will just suck in more people shorting it. That's the beauty of a ledge break setup. But again, the ledge break overnight is not as likely, but it's really likely. So this one's going to go here. And there it goes. Man. Oh, and look where it went to, 27.5. Yeah. You can predict this over and over again, night after night, day after day, and it will always happen, guys. This is one of the reasons it's one of my favorite setups, but it's really hard to learn how to trade that, because you can trade it a bunch of ways. You could have gone with that one long, which obviously would have been the way to do that one. And then once it's happened, if I was looking for a place to fade, this would be the place to do it. I'm not going to do that this morning because there's a serious bid under the market here, and it's trapping everybody. So this is a good time to sit on your hands. But that was a really good spot to take long for that ledge break. Anywhere once it got close. Remember, I said it's a little too far away, and then it moved up a couple of ticks. I said, okay, now we're going to get it. That's what you're looking for. Within 6-8 ticks. And I'm not exaggerating. It's not hyperbole. The odds are 99%. I've literally tracked that for almost 2 decades. And I can count on one hand how many times it didn't work. The problem with that setup isn't that it doesn't work. It's that executing against it, you really have to be careful how you trade that. That one obviously was a perfect long. And look where it just sucked up that liquidity that was right there and then just blasted up. And now, you could probably fade it and make some ticks. But like I said, so far, I'm seeing good setups, but my risk manager, my trader is seeing good setups. My risk manager is saying, you know what? I would let the morning play out a little bit more before I really jump in front of any of these. So that long is probably the first one I would have traded if I if I had time to describe it to you guys and then had time to get to it, I probably would have taken that one. But
yeah, I want to hit on one thing or one aspect of what you just said, and then let you get started for the day. Is this is discretionary trading. Right. This is so important, is that this is not mechanical systems trading where, well, my system gives a signal and therefore I must take every single trade. Otherwise, I'm not letting the system work the way it will over time and blah, blah. And I used to totally think that way, that if you're going to trade, you have to take every single solitary, quote unquote, signal that your system provides, and you can't miss any. Because mathematically over time, the one you miss could be the one that makes everything work. And that's just absurd. It's discretion.
Well, it's true statistically.
It's correct. It's on paper. It's one of those academic papery things. It's like, well, yeah, it's not true. However, there's a whole lot more to it than just that. We live in the real world. We don't live in paper. Right. So, despite, he saw that this is probably, a short here, but the discretion kicked in, and that's so important. You got to develop the discretion, and it's hard. It just takes a lot of time.
And it becomes about, when you get really good at seeing setups, which is just practice, it's purely practice, then it becomes about your execution, which is about risk management. And like right here, this is an interesting spot to play this long again. It's pulled back to the spot we broke the ledge from. And so, that's clearly an inflection point because it just inflected. So, by definition. But again, that's not a really high odds play. It could go either way. It could continue down, certainly, to the liquidity. That notice how the liquidity is scooting out of the way as we come down. Are you guys seeing that? That's also very telling. When liquidity holds as we come down to it, that tells you one thing. And when everyone says, nope, I'm going to move down, and you see the flip roll over as we're coming down, that's people getting out of the way. It's not that they don't necessarily want to buy anymore. They just want to let it come down. And so they're scooting down. And so this is a really good set of conditions to just go over what we're seeing. And then if I can respond fast enough to my mouse and we get a good setup here, there have been some tradable ones. That long right there was the first one, like I said, that I would have probably taken. All right, so let's formally start the session. I see most people that are probably coming live have drifted in. Can I please explain what I've said this one over and over again, but I will say it again, and I will say it. I'll repeat it for you, Jan, because of you're asking the question at a timely spot. I've forgotten how many millions of times I've said this. Now, I'm not being angry about that. You'll hear me over and over again, and it goes in one ear and out the other for a lot of you. If you're in TRG, for the Scalpathon, it might be new. Ledge breaks like the one we just saw. There's three criteria, and there are for all setups. So I'm going to do this formally. I wasn't going to do it now, but since you asked, I will. It's not a bad time to do it real fast, right at the open here. So let me get something to draw with. Okay, so a ledge break is basically the idea that wherever the top of the session is, that's the ledge. And a minute ago it was 25. It was right here, and we blew through it. You can see there's the blow through, and there we went. So that's what a ledge break is. It's breaking the edge of the session of the volume profile one way or the other. Doesn't matter which way we're going. So given that, okay, I want to see three things. And I said them as it was happening. Number one, you don't want any sort of significant high volume between you and the ledge. So we were going up, and that's true. There was no high volume. All the volume was below us. The criteria where that might happen, let's say this is what the volume profile looks like. Maybe there's a bump of volume, and then there's a low volume area, and then there's all the volume. Let's say that's what the volume profile looked like. I don't want to be in here because there's volume above me. That's what I'm talking about. I don't want to see any big high volume node anywhere on the volume profile between me and the ledge. If there are, that's a spot that could interfere with the ledge break. So it's very logical why I don't want to see that, right? Okay, so let me get the eraser here. And so what I am looking for is real simple. We want to be above or below. We don't want any high volume node between us and the ledge we're going for. Where's my mouse? There it is. Okay. Number two, so that's number one. Number two, we have to be going that direction right at that moment, like we were when that ledge broke. If we're going the other way, then the odds are zero because we're not going the right direction. Okay, that's number two. And number three, and I described this as it was happening, I want to be within, before all this volatility, I would have said 6 or 8 ticks of the ledge, because then it's going to go. Okay. But with all this volatility, I've been seeing them go from as far as 10 to 12 ticks away. And so the point is, we want to be on the way there. We want to be fairly close, and we don't want a high volume node between us and the ledge. Those are the 3 criteria for the ledge break setup. Okay, so that is the answer to your question. Let's go back. You can follow up if you have any. And by the way, so if those 3 things are true, then if I look at my database of trades where I have taken that trade under those conditions, in the last 20 years, I have a couple of 100,000 trades in an Access database. If I query that database, how many times did that trade fail? I can count on one hand of hundreds of thousands how many times that trade failed. Okay, that's why it's 99%. Hopefully that answers your question. Okay, let's see. Back over here. So we are consolidating down here now, which is really interesting. And the liquidity's kind of come up underneath us. So let's let it do that, and let's go on with the material. Okay, we have a follow. What if the delta in the way, if there's absorption closer to the edge? Again, Jan, really, really important, particularly for you because you're smart and know a lot of math. But I'm going to say this for everybody. This is a critical piece of understanding these scalping setups. There's no what about, okay? The 3 criteria, and there are no other criteria, Jan, literally nothing. I don't care if it's Thursday. I don't care if it's a full moon. I don't care if there's delta there. I don't care if there's delta not there. I am looking specifically for those 3 things. And those break ledges for a specific reason. People tend to short what they consider to be a weak top like that. And because they do that, anybody with any sort of volume can plow through those shorts, force them to stop out, and then cause the reversal. And we literally just saw that happen. Okay, does that make sense? Yeah, it's a setup, not a signal. That's another really good way to put it. And again, Jan, I got to repeat this over and over again to you. Because of your math training, you're very used to, a proof where, this plus this equals this. And trading is not that. Trading is under these 3 conditions, the odds are in our favor. And over time, odds being in our favor means we will make money. Okay, it's a slightly different but profoundly significant difference. Hopefully that makes sense. We have an edge, exactly. Okay, and that's the edge we're trading. We know ledge breaks go if we get them under the right circumstances. So that's what we're waiting for, and that one was perfect. All right, let's continue. So today is about trading the pre-open, and we're seeing the pre-open in just glorious color here. This is exactly what it usually does, and because of what's going on in the world, it's just doing it much more dramatically today. And basically, you have to think about it this way. Remember from yesterday's session, this is the world, and right now, if you look at the times of day, it's midday now in Frankfurt and late morning in London, and so basically the entire world is trading right now. The thing that kind of holds some people back is U.S. equities are not trading, and that's by far, the biggest equities market. So Europe is kind of doing their own thing based on what they think is going to happen here. But because we're not open yet, it's all speculation, and that's why you get this kind of action. And it's great action to trade, but you have to understand that price levels don't matter, and deltas and things, structure doesn't matter, because what's driving this action is literally just pure price action. It's just pure, really short-term supply and demand. And so that's why we get really dialed in on 15 seconds, for example, or a minute, because we can have a move like we just saw here. This move went from, let's call the spring out of that right there. This went from 11. I'm on my far left panel here now. And it came up really aggressively. And then we had our blow off through the ledge. And then we came right back and we're in ebb and flow at the high again. So, it's real predictable action if you don't get married to, 25 is an important level. Nonsense. There are no important levels. This is overnight action. So if I bring up structure and look at it, it really doesn't mean much right now, because it's important to understand the idea of the market profile and structure was developed around regular trading hours. The Globex overnight didn't exist then. And the statistical basis for market profile didn't consider at all 24-hour trading. So leaning on any sort of structure for these setups makes no sense, because they're not respecting structure. Where the deltas are and whatnot don't matter, because there aren't enough aggressive limit traders. Nobody's going to be passive at any really specific levels during the overnight session, because there's not enough information. They're going to wait till regular trading hours when there's more volume and more liquidity, and then they're going to play those places. The volume that you are seeing in the overnight sessions is speculative, and you have to respect that that is different than what you see structurally during the day. It will respect structure in the real big picture. I posted this on my Twitter feed about, we're back in the range on the TPO views on all the indexes. We tested an extreme of the range. We broke low. We came back up, and we are dead center in the range again. This is how markets find value. But to sit here and say, well, 42.25 or 43.25 is a significant level, nonsense. There are no significant levels when we have these kind of conditions. The market has ranges. And so it's really, really important to think that way. Think in terms of range, particularly with NQ, but even under these conditions with ES, it's critical. Okay, so let's see. I see some comments. Let me just... Yeah, the edge. Oh, and you know what? An edge is not only an advantage, but an edge is the edge of a volume profile that is not a ledge. That is also an edge. So it's complicated language, but let me go through those definitions real quick. That's probably important for this conversation. So let's just use this. Let me scoot this over. So why Sierra Chart can't write their code so that when you blow a window up, it automatically, rescales itself.
Let's not go.
Let's not start there. Yeah.
We'll both lose our shit for the next hour.
I know. I lose my shit every time I move a window and I have to reconfigure the whole thing. It's like, really?
Yep. Easy solution. Don't move windows.
Yeah, exactly. That's what they would say in the support board.
Yes, exactly. Yeah. It's a feature.
He designed it that way. Okay, so let's talk about edges and ledges. And real quickly, just definition-wise, edge, E-D-G-E, I use it two ways in conversation. One is I say edge as in advantage and at my trading edge. Okay, that's a completely different meaning, and that's an important one. But with respect to volume profiles, there are also edges and ledges. And just to be really clear, on a volume profile, the ledge is always the boundary of the session at either end. So those are the ledges right now. And we just broke one and made a new ledge, because we went higher up, right? We just saw that. Okay. Edges of the high volume nodes are also significant. And right now, this is kind of a sloppy volume profile, but there are places that are really obvious. This is a real big high volume node here, right? And and you could draw it a bunch of different ways, but you get my point. This is high volume, and this is, like low volume. Sometimes it's easier to see them. You know what? Let me hang on. I'm going to try to see if I can make that, now that it's rescaled, I can make that easier to read. Hold on. I want to be able to show the distinction better than I am showing it here. Let's try. Yeah, it's not going to let me do that. Well, the point is, high volume nodes, the edges of those are significant. They're not as significant as the edge of the entire profile, which we call a ledge, but those can be significant. This is just a horrible example. I apologize. I'm going to go find a better one because we literally just can't see any there. And let me scoot this back over. So hang on. We might be able to see some on the session profile. Let's grab it real quick. No, that's not going to scale either easily. How about an NQ? Can I see a good example? Oh, yeah, there's a really good example in NQ. All right, let's use NQ. All right, yeah, here we go. This is much easier to see. So here you have high volume nodes, and low volume node. So the edge of this high volume node, like right here where it becomes a low volume node, that is a significant area too. We see a lot of inflections there. We see those low volume nodes get filled in when we come down there because, by definition, a low volume node is where there hasn't been a lot of activity. And if we go through it again, more activity, it's going to fill it in. So that's what we're talking about when we say ledges and edges. And I just wanted to clarify that and the distinction between an edge as an advantage. So is everybody on board with that? Any questions? Just want to make sure that we don't lose anybody there. Okay, so again, the agenda for today is to watch this kind of craziness that we see in the pre-opening and talk about setups as we do. So we just talked about ledges. And again, I'm just going to, I didn't do a PowerPoint for this. I just want to, have it visual for some people. We have some people that are not going to have sound available here. So really quickly, the ledge break, I'll just, kind of type with my RA fingers. Ledge break. Okay, we are looking for, as I said, 3 things. No high volume node in the way. It's that easy. We want to be going to, going to the ledge. In other words, not the other way. What's that?
I can be your fingers. I can type for you.
Yeah, you could. That's true. For this stuff, but then we'd have to share your screen, wouldn't we? How would
okay. I was just thinking I'd put it in the chat, but yeah, if you want it on your screen, then yeah.
Yeah, I want people that are we have a couple of people that are not going to have sound. So
right, good point. Yep.
Yeah.
Never mind.
So going toward the ledge, no high volume node, and we have to be close to the ledge. And I've said that's under these conditions, call that 8 to 12 ticks ish. Okay, so that's how a ledge break works. All right, so we're done with that one. Let's talk about another one real fast. We have something called HMOMO. HMOMO is just an abbreviation for high momentum. And this is a condition in price action we see a lot. And it's one of the harder ones to trade. So I'm going to minimize this for a minute and just talk about, we've seen it. We just had high momentum. Okay. And the problem with high momentum, anytime you get it, and, it occurs kind of suddenly and it ends suddenly too. Here's a couple of examples of high momentum that just kind of started for whatever reason, right? And the difficulty when you get high momentum is always figuring out whether it's enough momentum to go ahead and hop on board, or you should wait for it to subside or at least reassert itself after an attempt to subside. So what I did a while ago is I made a document to kind of summarize that, and I shared that in the stream for everybody. So let me just bring it up real quick. It kind of walks you through how to make this decision. And let's see, where did I put that? Okay, Jeffrey, I put it, here it is. Scalping decision process is where that is. This is the document I'm referring to. And structural stuff is important. And when we talk about scalping ranges, all the things under structure on the right apply. But and the bottom right of the left side of this. But what we're talking about right now is HMOMO and this decision. So the far left of the scalp side. If we have directional high momentum, okay? So let's kind of scoot this over here for a second, and let's look at one example of it that we just had right there. And it was pretty well correlated. I've got oil down here. Let me get oil out of the way and put the indexes back. So we can see that was correlated across all 4 indexes. And this is a really important point. Overnight, we tend to have really good correlation because the equities aren't trading. So the indexes are all basically doing the same thing. They're speculating. So in general, overnight, you want to just trade ES because that's where the volume and liquidity is. And most of the time, the others are coming along with whatever ES is doing. So for overnight, that is an important point. During the regular trading hours, the other instruments sometimes are better because they're a little less crazy with algorithms. But in the overnight session, I almost never trade the other instruments. Sometimes I'll trade NQ, but not under these conditions. Okay, so back to HMOMO. So when you have high momentum, the first thing you have to ask yourself is if that's likely to continue or is it slowing, subsiding? And to answer that first question, it's often a matter of, well, what caused the high momentum? We often don't know, but sometimes we do. And we had a while ago. Let's see, it was right back here. This is right after I got up and I was having coffee. There was some conversation and talking heads in the Euro space. Leon Panetta is speaking actually shortly now, 3:30. But prior to that, there were some numbers and whatnot came out. And that caused this drop. And it was a perfect example of high momentum and a high volume reversal. So that's the one that I posted in the pit. And I just wanted to call your attention back to that as we're talking about this. So if it's something that occurs really suddenly, and I don't have a news feed for a really good reason, things get baked in really fast. They get priced in really fast. So it used to be a legitimate edge 20 years ago that if you had a news feed and you saw something come across the wire or the news, you could trade it. Now, the price will react before any news service on the planet can get that news to you. Because there's people that have very expensive computer systems that are just doing that. They trade off Twitter keywords, and there's algorithms doing that are so much faster than you and so much smarter than you. It's not even worth thinking about. So don't try to look at why did that happen by having a news feed? That's a complete waste of time. But knowing that there are economic events or conversations, talking heads going on that could cause sudden movement is what you want to understand, because one of the best setups when there's HMOMO is when it stops and reverses, and that's a high volume reversal. And that's the example that I posted for this session today, this one. We had HMOMO, and this is what I was talking about. We started to come down just really aggressively. It turns out, I went back and looked later, it was because of the numbers and the conversation in Europe. But who cares? The momentum started, and because it happened so fast and it was so aggressive, I said, all right, I'm definitely not joining that because I don't understand it yet. If it can pause and then continue, maybe I'll join it. But for right now, I'm just going to watch it. And what you're looking for is it to just stop. And that's the key. So let's go to our high volume, our HMOMO. Do you join it or not? Is part of the same conversation with what you really are looking for. The best setup in this instance is a high volume reversal. Those two are always closely related. Why? It's not possible to have a high volume reversal unless you already had high momentum, because you have to reverse from something. That's what just happened here. This is completely different than just moving around in a range back and forth. This is really aggressive, and it's really obvious when it's happening. So the minute we get a sudden burst of momentum, and these two things go together. So let's scoot this over here and let's go back to the other document we were just on. I have to find it. There we go. Okay. So if you get a sudden burst of momentum, just take a step back, take your hand off your mouse and your keyboard and say, okay, I don't know what's causing this. It might have been news. If you know there was a news event coming, then that might be a good conclusion to draw. But take a step back and say, okay, what's the nature of this momentum? And if you can see a spot where it just stops, that is a sweet high volume reversal spot, simply because if you're wrong, it's really obvious. And if you're right, you get a move like I just showed you a second ago on that one that happened overnight. So this one. So let's talk about HMOMO. The big question with HMOMO is join or not. And I have trained myself whenever I see momentum to immediately, it's discretion, it's thinking in bets. Do I want to join this? And here's some examples where I will unequivocally join momentum, okay? And you're going to have to just kind of take notes on this stuff. One example is if it's really clear, like let's say we've had a trend day down and we're at a ledge at the bottom, and that would be an example where if I was seeing accumulation, Jan, and seeing, a really big delta at the bottom of a move down, that's a really clear sign. I know what that means. That is people covering shorts. It's not people initiating longs in most cases. So if I see that setup and it looks like it's going to puke, we sit down there and the buyers are buying and buying, but price isn't going up and we're on a ledge, and we start to break that ledge with momentum, I will join that in a heartbeat, because that's how a breakdown of a level starts with accumulation at it and then a puke out of it. So that is one simple example where I will join high momentum unequivocally. I won't even think about it. I will join it when a level just goes. And there's a lot of examples of those. We call them pukes in the library. Under these conditions, we've had them over and over again. But that's one case. But in general, I'm very hesitant to join high momentum. One case where I'll join it, a second case where I'll always join high momentum is the Open 5. The Open 5 setup is a high momentum setup right out of the price discovery of opening of regular trading hours. And that one, I always go with it. I will never fade that, and I'll go with it with a market order. But those are really the two cases where I really will just jump into a high momentum trade. Most of the time when I see high momentum, I go into this little decision process that I posted and that we're talking about. And rather than try to join the momentum, I look for a high volume reversal, because high volume reversals by far are the setups that can produce the most money the fastest with the least amount of risk if you get good at trading them, simply because it's just so obvious when you're wrong. If you buy that scenario we just had, that we just looked at, that example, let's bring that back up. Let's say we were in this high momentum move down and we had this occur where it just stopped. Look at that. I mean, 15-second bars, the delta went from being, way negative in one bar to being positive. So the whole personality change is right there. Does everybody see that? Does anybody not see that? So this is our high momentum down. And same story here on NQ. And then right here, it's like, talk about a line in the sand. So this is what it looks like when a news event impacts the tape. We get a sudden reaction, and then there's some spot where everybody says, all right, that's low enough. And it's not something you can see easily in structure because it happens way too fast. You're just looking for the change in the energy. Remember, I posted that earlier too. We'll go back to that. And so that's your sweet spot right there. You enter, and if you're wrong, you're going to know it instantly. But in most cases with a high volume reversal setup, you're right instantly. And, good trades work right away. Look at this one. Depending on where you actually got filled down here, you didn't have to wait very long to find out if it was going to work, right? So that's a perfect example of it. So this kind of relationship, it's kind of a broken relationship between high momentum and high volume reversals is really important to understand, because joining high momentum is probably the easiest way to lose money scalping. If you join high momentum and it ends, so if you're the guy that's like, oh, cool, I'm going to get short on this, look how aggressive this is, and you get short here, and boom, it goes the other way, and I know that's happened to a lot of you because, you haven't developed the fine tuning to react properly to these things, and that's why they work. So keep that in mind and learn to practice that one. If you're going to trade high momentum, really, really, really focus your emphasis on only one thing in your brain. And let's again, just to be really, really repetitive, the thing in your brain is it going to continue or not? If it's going to continue, it's usually pretty obvious. I'm trying to think if I have a good example of that. Oh, you know what? I do have a good example of that. There was that wave volume example we had a couple of days ago when the market was trending. And I think that's we looked for that a couple of sessions ago. Let's see if I can find that real quickly. Oh, that's not it. It was wave. Do you know where that is real fast, JVC? The one I'm looking for.
I don't remember offhand.
Here it is. Got it. I found it. Okay.
Perfect.
So this was an example where the market had a lot of momentum down. Okay. And it was really obvious that joining this momentum, this was a 1 minute view, and literally for 2 hours, the market couldn't make a higher high. It kept making lower lows on high volume. And so when you're seeing this, that's just it's wave volume also, but it's momentum that you want to join. So momentum that's continuing and wave volume is illustrating that it's continuing is another example of high momentum that you would want to join. Okay, let me pause there and see what questions and stuff. What time does Frankfurt open? It already did, so we missed that one. In my world, it opens at 2 a.m. So, how long would I wait? How long would I wait to see if that plays out? Jeffrey, please, when you post a question, if what plays out, what were we talking about? Are you talking about a high volume reversal? It plays out or it doesn't. You don't wait. It happens or it doesn't. Is that what you meant? Yeah. No, it's not. It's not a factor of time. It's a factor of it reverses or it doesn't. And if it doesn't reverse, then this is actually a good question. One of two things can happen if it doesn't reverse. And this is actually a really good question. Thank you for asking it. Okay, so let's say, this is our chart and we're coming down really fast. Okay, so that's our HMOMO. Now, there's a couple of things that can happen. We can just stop short, which is what you're looking for. That's your kind of signal. And then, go the other way. That's the high volume reversal. So that's one thing that can happen. All right. Another thing that can happen is we come down really hard and we stop short, but then we go into ebb and flow. And that could become a high volume reversal. And the setup is still okay. I will still play that as long as it doesn't take the low out, because that's where I'm wrong. And sometimes if it's been non-news related, if it's actually, supply and demand related, the market will come down from high momentum and it will consolidate for a while and then it will start going up. So this is still a high volume reversal setup. You got to be a little more patient, and the vast majority of them trade out this way. But if you do get that, what you could have found is you could have found a really good structural entry by accident. And that also happens with high volume reversals. But they don't reverse quite as quick because, again, it's a structural spot. So this is kind of to your question, Jan. If you're seeing the high momentum and it comes into, and the delta, let's say we were seeing accumulation here on the delta and a potential puke continuing down, but it doesn't puke and it starts to go the other way, then, that's trade away UB. That's one example of that. And it would be a really good long entry, but it would play out slower. So does that make sense to your question, Jeff? I'll wait for you to respond to that. Meanwhile, I'll answer CK's question. When should we not join HMOMO? You should never join HMOMO if you are uncomfortable that it's going to continue, because by very nature of it, if it doesn't continue, it's probably going to at least consolidate, probably going to do a high volume reversal. And so you're going to be off sides really fast. And this is the danger. The high momentum, when you're watching high momentum, it's exciting. The market's really moving fast and, boom, boom, boom. And that's why the open 5 can be a very tricky trade, because you can get wrapped up in the excitement of the open and lose sight of what's happening. And so the open 5, we will talk about. Let me grab the calendar real quickly. I forget which day we're doing the open 5, but we are going to talk about that in detail. And that's the purest momentum trade, where you would join or not join momentum. It's the best one for an example. CK, let me real quickly go to the schedule and see when we're doing that, because I forgot. Let's see. Okay, we are doing equities pre-open and open. Okay, so we are going to do the open 5 on Tuesday and Thursday morning. So both of those, we will see it. And it is the purest momentum trade, because the open is often, a high momentum event. So stay tuned for that. All right, let's see. Got it? Okay, so Jeff, follow-up question. Thanks, been in these and spooked out of the trade. It later plays out. Yeah, the key to being successful in these is to have a place where you're wrong. And that's why the trade is such a good trade. Look, if it just came down like what were, the two examples I drew here, and, you're wrong if it's down here. And, it might sit and consolidate for 45 minutes, but as long as it doesn't take the low out, remember, we're thinking in bets, and as long as it doesn't take the low out, your odds are really, really good. It's going to go the other way, at least, some number of ticks. Isn't that just logical? Is there anybody that's not logical for? And forget what price level this is. Doesn't matter. What the number is, it is irrelevant. It's the activity. It's the behavior of the trade. Is anybody not getting that? Okay, cool. All right, so let's see. Okay, Jan, I always feel like high momentum is a little bit like bait. That's absolutely true. It is. And that's why you need to be bait and switch. You need to be really careful. But yeah, because you don't, Jan, by reading your question, you don't have a set criteria when you will join or not join HMOMO. And for me, I have to see really clear evidence it's likely to continue. And what would be some other examples of that? Let me show you. Were you going to say something, JVC? I'm not sure if you.
Oh, no, I'm muted.
Okay, I thought I heard you start. So let me show you another example or two of the same concept, because this is a really good conversation. It's really useful for you guys. So let's say, this is going to be my really crude attempt to draw a high volume or a volume profile, by the way. So, and I'm going to kind of try to mimic today's. So, we're thin at the top, and then we've got a decent bulge. And then it goes into, I'm going to exaggerate a low volume node. And then let's say this was a double distribution and we had another one down there. And then that was the bottom of the session. So let's say our session looks like that. Okay. And just for fun, let's change colors. It's hard to do this in Zoom. All right. So examples of where I big moves and then jumping in and it just stops. Okay. A lot of times the volume profile will give you clues about that. So let's say, for example, we came up here and, the ledge was originally here and at 25 and we blew it up to wherever it ended up at 30, whatever, 32. And, that was a really clean edge of the profile. So let's say, just for fun, that you were looking, we got up here and we got a high volume reversal. So price came up and then it started coming down really fast, aggressively. You could join that momentum and join that high volume reversal because you're really clear where you're wrong. And the second part of it is we know we have this big low volume node to travel through before there's another place, which is the next high volume node, that I would expect it to slow down. And why? Because, we've traded a lot there. So there's a lot of people that want to trade there. So the opportunity can also be gamed by just, how far away is that when we're up here? And so, again, it's a discretionary decision, Jan, that you're making, and you have to look at the criteria that matter for the decision. What's the risk? That's how I decide where I'm wrong. And what kind of potential do I have? If the high volume, if instead of the scenario I just described, it didn't look like that, let's say it looked like this. These tools are horrible. Anyway, all right. And let's say instead of that big, long, top up there, the high volume was the top. And, then we had a big bulge and then, let's say that was the whole session and here's the top and here's the bottom. And we come up here really aggressively and then we stop. Okay. Am I interested in trading that? No, because, we've got all this volume right here. So, a high volume reversal has no place to go. A ledge break has a place to go, which is up. But that's, again, a really good place where I can really define the odds of what I'm doing. And notice how it keeps coming back to that. The answer to the question is always, well, do we have a situation where I can look at the circumstances and say, okay, the odds say that this will happen. And if it doesn't, I'll know here. And that should be really clear. If it's not, then let me know, because that's really the key to getting all of this stuff right. Okay. So, are there any other questions? The criteria for HMOMO and high volume reversal, it should be pretty straightforward at this point. What you're looking for is where in the process are we and how is the trade unfolding? And based on that, what is the best odds of what we could do next? And sometimes it's nothing. Oftentimes it's nothing. And the other consideration, I've started talking about this, but nearby inflection points, that's what we're talking about right now, which is things like high volume nodes, or again, Jan, your question about, deltas. Yes, those are potential inflection points, but they're the last piece of the decision. It's kind of like we say, well, if we don't have anything else to game this by, what else is near there? What high volume nodes, low volume nodes, deltas, previous day highs and lows, all of those things are the same. They're potential inflection points. Okay. All right. Let's see. I think we got all the questions. Cool. All right. So let's get back to kind of talking about the pre-open here. And we're really range bound, by the way, with a lot of momentum in the range. You guys seeing that? I mean, the range is really holding relatively clear here, but we're getting these bursts. And that makes it tricky to trade. Let's see if we can find some trades here. So if we don't have, let me bring up, again, I'm kind of working from the outline that I posted here. So high momentum, high volume reversal, edges and ledges, and ranges. I want to talk about ranges a little bit because we're kind of getting rangy now. The idea of ranges is just, when the market tends to stay in a short-term range, and again, the right friggin' now, you have to focus on that. And it does that simply because, absent new information, markets tend to balance. That's literally the function of the auction that we have, that we trade, is the market's looking for balance by buying and selling. And in general, it finds it. And it's doing that right now. The market's in a range. If you see, we're kind of just sitting right on the lower LRC, and there's some demand down here that we kind of ate up, and now we're kind of trickling back up into the range. This is the behavior you see over and over all the time. So when it's relatively predictable and there aren't big giant sweeps or, busting out of the range, that's a good time to trade the range. And the more predictable it is, the better. And predictable ranges occur overnight. We're seeing one right now. They also occur in the middle of the regular trading hour session, the rookie roast, often, from after the first hour and a half or so. Once it settles down, we'll see some really good range trades. So when the market is range bound, it's really funny. You'll see, like, if you go on to, the Top Step Facebook group, or, any place where rookies congregate, the market's really choppy. There's no trades, there's no trends. And, the pros are all saying, yeah, this is wonderful. It's really cool because we're in a range and it's really predictable. Therefore, I can trade more size. And so, the rookies are like, well, there's no trend. There's nothing to do. It's choppy. And the pros are like, no, this is perfect. So think about that. Ranges are your friend. What can you do wrong when you're trading ranges? Well, you can interpret a range that isn't a range. If you're trying to trade a range that isn't actually there, that's a big mistake. But if you give yourself some just really simple guidelines for ranges, and the one I like to use is LRCs. Over on a 15-second view, the LRC is telling me, look, this is a sum of squares type of analysis. So, prices are going to go above the range and below the range. The range is nothing more than an approximation of the best fit of all the trades that went on over that period of time. And best fit, I'm putting that in air quotes, in linear regression is a sum of squares. And again, you don't need to be a math genius. And in some cases, being math driven almost makes that harder to understand. Just use the words best fit. What linear regression is doing for us is it's giving us, based on the price action, the best fit. And that's the range right now. And that's the little pink line or whatever you want to call this color at either end. And the faster one is just kind of a way of seeing, well, how is it changing? Remember, that's what our evaluation has to be all about. So the scalping decision process, that's the graphic of it. And this is what we need to be thinking. Which way are we going with how much energy right now? Well, let's look at that. We're not really going anywhere. We're in a range. Okay, that's good. What else do we want to know? Okay, we want to know. Let me just make this so we can watch it and watch that and this. Okay, how is the energy changing? Well, right now it's really not. But that's important. We're at the edge of the range, and there's supply there with a big delta. This is an inflection point by definition. So this will hold or break right now. Perfect example. It should hold, but if new information comes in, big buyer, big seller, news hits the tape, whatever, it will probably not hold. And guess what? It held The buyers stepped up right there, not because they saw the LRC on their charts, but because the nature of trading over the last few minutes has been exactly there. There has been demand there. And as long as there's been demand there, we have every reason to believe there will continue to be demand there unless it changes. And that's why how is it changing is a really important question. Does everybody get this? This is the key of understanding ranges, is that the LRCs are not a trading signal. They're not telling us, oh, it's going to turn down there. They're saying the best fit of the trading energy right now says that we probably won't go farther than that. And if we do, it's going to be a significant event. You're going to see energy there. And we didn't get that. Instead, we saw exactly what we expected, that the range would hold and we drift right back to the middle. I mean, almost to the tick, we're in the middle now after that event. Does everybody see that? And does everybody understand? If you don't understand, please ask a question, because learning how to trade ranges is really the sweet spot of scalping over time. Yeah, high volume reversals you'll make nice money on, and HMOMO if you catch it. But trend days are 15% of the time. And so HMOMO that you go with is on a trend day or at the open 5. So the odds are overwhelming that you're not going to see a lot of those. But you are going to see a lot of ranges, because the market's natural behavior after anything is to go into a range. So, that's why the first time I really understood that, my mission became, how can we trade ranges? I really want to learn to trade ranges, because that is what the market's doing the vast majority of the time. So I'm going to pause here. We're going to take whatever questions we have, and then we're going to take a little break. So let's see. Often it slams into the edge of a range with high momentum just to turn around. Exactly. That's what it does. And that's why understanding what the current range is, if it's the initial balance or if it's the fast LRC range, can be a huge advantage, even if you're trading on a structure or a swing trade over a period of days. This can help you really get entries really precise, so that your MAE goes way down, and that's what you want. Look, we're not in the market to lose money. We want to go in the market, make money, and get right back out as quick as we can. And that might be seconds, minutes, hours, but we have to constantly be gaming that. Are we at an advantage right now? And range trading is the most predictable advantage there is, because when a range goes, it's really obvious, and it happens dramatically, like you said. And when it doesn't, it goes right back into the range, and it's a really tradable event. So what we're going to do going forward, the rest of the morning session, we have another hour and change, hour and a half. I'm going to do some trades, I think. We're getting a nice little range here that looks like it could be fun to play. But first, we're going to take our first break. We've been at it almost 50 minutes. So get up, stretch, go get coffee, go do biology, whatever you need to do. I'm going to do all that, and then we're going to come back. If you have any questions or comments about any of this, please get them into the chat so we can talk about them when we come back from our break. But for right now, I'm going to put up a little on break till, let's see, we're at 3:50. Let's go ahead and take a 10-minute break to the top of the hour, which will be another market profile period, and it could be some volatility for us to trade. So let's come back right before that. So
by
let's
the way, Jeff, you can hit Control+ to blow that text up if you want.
Oh, cool. Okay. So on break till 3:58. And there we go. AM. My fingers aren't working this morning, which is part of my rheumatoid arthritis. So bear with me if my typing isn't good. I'm actually a really good typist. I can type like 160 words a minute when my fingers work. But when they're not working, it's like Braille. Good luck. All right. We're on break. We'll be back. Type your questions in the chat. Think about the stuff I've said, what's landing, what isn't landing. The whole idea of Scalpathon is you guys have just 100% access to me 24 hours a day under all conditions. So this is your chance to ask anything you ever wanted to ask about anything, and get good answers and learn ways to take money out of this, because it might be counterintuitive coming from technical analysis, but just remember over and over again, RFN, right fracking now. That's what's important. All right, we're on our break. I'll be back in a few minutes. Alrighty, he's back. A little bit early, but what we are going to do, I'm actually, sorry, Coffee going down the wrong way here. What I'm going to do for the next segment of this morning, starting at the top of the hour here, is just do stream of consciousness on price actions. I'm just going to describe to you what I'm seeing within the context of the price action and the setups that we've already talked about. And then if we get some trades, we'll take them. I see a couple things I would have taken if I wasn't getting coffee a minute ago. So I think we might get a couple of trades off here. We have a nice little range to play, and I don't think it's going to stay in this range all that long, but the departure from this range could get very interesting. Let's see. I see a good question. I will address that as soon as we're all officially back here. Well, we lost JBC. That must be the private message I have. Oh, you're back. You disappeared, JVC.
I forgot I have my little local switch that my office equipment is all connected to on a timer that's set to reboot every morning just before 4 a.m. so that everything's ready to go. But I didn't account for that for this session. Oops.
Yeah, I had stuff like that happen. That's pretty funny.
I remembered the other timers I have on other equipment, but I forgot that one. So
we are teasing the top of the range right now, and I'm watching it. I'm not interested in shorting this here, but I don't like it long either. So here's a good example of high momentum I wouldn't join. We just got a momentum. We broke the range, but it's not aggressive enough to join it, but it's too aggressive to fade it. So there you go. That's easy. Sit on your hands. My gut is to short this, but it's too trappy to do that. There's nothing above us all the way to 30. So shorting into that, you end up being the stupid retail guy shorting the top. So, it could end up falling right back into the range now, but by virtue of the fact that it popped out of it and has stayed out of it, even though there's been some aggressive selling here, says this is a loser trade either way. You could get trapped in this trade trying to trade it long or short. And there we just had a reversal sweep of 8 ticks going both ways for exactly why I wouldn't want to trade it. So good example there. High momentum, I would not join. Okay, let's see. Question from Elena. When there are ranges in the regular session, using market structure, can we add more? Absolutely. During regular trading hours, market structure is a real good thing to think about where to lean. That's what can I lean on? High volume nodes, structure, max delta, min delta, absolutely, all of those things. But overnight, the danger is, the reason I emphasized it so much a few minutes ago was if you try doing that to the overnight session, you're not realizing and not understanding market profile well enough. Market profile was designed when there was no overnight. So the whole idea of structure doesn't make a lot of sense when the market isn't in regular trading hours. So yes, excellent question. You have that correct. Sometimes I enter when it reverses and then it takes the lower of the high edge of the range and I lose the profit I had. You should always quickly take profit. Elena, there's 3 rules to scalping for me, and this is my rules for trading in general, but let me state them and explain them, because the first one is don't lose money. And everyone says, well, duh, but there's actually more to that than don't lose money. It means, don't let losers go. If you're wrong, get out of the way quick. And if you have a good edge and you keep your losers tight, you will have a great growth in your equity. So the next one, and these are not in any sequence, they're sequenceless, so they're all of equal importance. Always take profits. Why? Because of exactly what you just asked me, Elena. If you don't take profits in these markets, profits go away really fast. And the only reason people don't take profits is because they think there is more in the trade. I can make more money if I stay there. And that's greed. Nobody went broke by taking small profits over and over again. Yes, it's not as efficient as staying in a good trade, but it's a whole lot more efficient than letting a good trade turn into a losing trade. Am I right? Okay. So don't lose money, always take profits. And then this last one, good trades tend to work right away. If you're sitting in a trade and it's not working, guess what? It probably wasn't a really good idea, or you're early or you're late. But have you ever noticed that when you see a setup and you take it, generally, if it's going to work, it overwhelmingly works immediately, particularly when you're scalping. If you're going to catch a high volume reversal, it usually will reverse pretty fast. And, for me, what's immediately? A couple of minutes. My average scalp is probably 30 seconds long. They range from, no time, 1 second, to a couple of minutes. But if I'm sitting in a trade for, 5-10 minutes and it's not doing what I thought it would do, I don't necessarily exit it, but I question what I thought it would do. I'm either early, late, or wrong. And, and I assume I'm wrong. That's the right answer to that. Assume you're wrong. But always take profits, Elena. Always. The only negative of that was you'd pay more commission. So what? Commissions are a cost of doing business. People say, well, I want to stay in that trade so I don't have to open and close another trade and spend another $4 in commission. Meanwhile, they lost $200 as it pulled back on them. I don't get the mentality of that. No, I'm trying to get to my target. It's 10 points. And I've got 5 points of profit, but you're going to let it go back to break even trying to get your 10. Why? Because you're convinced there's more there, and that's the problem. The market gives you whatever it gives you, and you can't know there's more there. There's whatever is there, and that's it. Okay? All right. Good. Brent, under what conditions should we consider the edge of the LRC is going to break and continue outside? Don't get married to the 96%, Brent. That's just the statistics of the range using 2 standard deviations. But you're trying to look at it by asking that question. You're trying to look at it and say, well, when it gets to the edge, how do I know if it's going to break or not? And the answer is you don't. You know that, and you're interpreting this wrong. It's not 96% that it's going to go back in the range. It's 96% of the activity is being captured in the best fit. That's what's 96%. So what that's telling you is that the edge of the range is where things are likely to happen based on the very recent action. It doesn't tell you that it's likely to go back or it's likely to continue out of the range. What tells you that is the order flow. Watching the delta and watching the wave volume and watching the order book changing, the liquidity changing. And that's how you see whether the ledge is breaking or not. It has nothing to do with any sort of set criteria. Does that make sense? Do you understand that? Because people, when I tell them that that we're capturing 96% by using the LRC and 2 standard deviations, they think that that's what it means, that, that 96% chance. That's not what it means. It's 96% of the activity we've captured. And subtle, but good. Okay, you got it. Subtle, and but important
4% differences. 4% can hurt.
Yeah, exactly. That 4% can kill you.
Yep.
So scalping means don't sit through a pullback. Scalping, Jan, is really simple. It is, what is the absolute least amount of time? That's the important piece of this statement. What is the least amount of time I can be in the market to execute my setup? And why am I concerned with the least amount of time I can be in the market? Because when I am in the market, I am at risk. Something can happen that can cost me money that is outside of my control. When I'm sitting on the sidelines, that can't happen. So if I go into a trade and I have profit and I can get back out with my profit, that is always the first thing I'm thinking about, because the chance that it could go the other way on me at any second is significant. So sitting through a pullback, that's saying you're thinking like a technician. And again, that's wrong. Sitting through a pullback, the English translation of that in scalping is, I had a profitable trade and I didn't take profits and it went against me. So the proper way to trade that is take the profits, and then if you want to buy the pullback, buy it again, like we just said in Elena's example. Excellent point, though. This is not technical analysis. There's not a signal and then confirmation. There are events that you can capitalize on instantly. And if you can't capitalize on them instantly, then you want to see when they stop happening, because there'll be another opportunity at that point. And it's just about getting in that rhythm of, and again, let me bring this up from the pit, because this is really, it's literally that simple. And people say, oh, you always say that, but it's not that simple. Yes, it's exactly this simple. Okay. Which direction are we going with how much energy? Let's do this right now. We are going, at this very second, let's reset this so we can see. We are going down with no energy. That's what, and now we're going up with no energy. So we're in a very tight range here. So that's the answer to number one. Number two, how's it changing? It's not. It's in a very tight range, and everybody agrees here, which is really dangerous because if new information comes in, we're going to move really suddenly away from here. So that's worth watching, and there's liquidity right above us. That's probably going to act as a magnet and will probably get traded, but you never know. And the liquidity below us is disappearing as we push down. So that means that they are not strong buyers down there. They're trying to catch good entries and exits just like we are. So the energy is in a tight range. It's not changing much. It's risky because of that. It's this apex. Apexes are always risky, but it's in a tight range. So it's tradable within that range as long as outside influences don't impact it. Nearby IPs. Are there any IPs? Not really. You know, the ledge is all the way up here. We're in the middle of part of the high volume node. So you know, look at that. By the way, remember I said that liquidity would probably act as a magnet and trade through. It just did. Very common that what a large trader will do will put up liquidity where they want to trade and then try to push it the other way so they can get a good entry toward that trade. Really, really common algorithm behavior as well. So just be aware that big liquidity is not support and resistance. It's actually the opposite. It's a magnet. And I hear new traders over and over saying, you know, I'm going to put my order above all that liquidity because that'll act as a backstop. No, that's the magnet. We're going that way. It's not a backstop. And this is a really common misconception. So I want to try to throw those in whenever I get a chance to. Okay, let's see. Waleed, how did you determine there is low liquidity underneath? No, I'm just looking at this is a heat map of liquidity here. And the brighter the colors, the more liquidity. So this whiter is where there's bigger orders here. If I can exaggerate that by making it black and white. So where there's white, there's a lot of liquidity. Where there's black or gray, there's very little liquidity. So that's how you read that. Does that make sense? So what I was seeing was when it was in this form, as we started to push down, this white down here was shifting down. They were moving away from the inside market. And that indicates they don't want to be filled. They're trying to find a sweet spot to sit and wait for the market to come to them. That's how passive traders trade. And meanwhile, the active traders are pushing it around back and forth in a really tight little range, which we can see in the LRCs. And remember, there's demand underneath us. We just took out what looked like supply, and as I've explained, is actually demand. When you see, a big liquidity right under or right above the market, typically it will trade through that because that's what that trader's trying to do. It's not support and resistance. Think of it as people advertising their intentions, but they often try to deceive. That's spoofing. So, I'm not that concerned with where lots of liquidity is. I'm concerned with the patterns of the liquidity. Does that make sense? It's just the visual pattern of how big blocks are playing around as we're moving. That's what's giving me information, not any one spot or any one big chunk of liquidity. That's what MBO does, and that is a useful technique, but that's not within the topic of this session. Good. Okay. These are great questions, by the way. Let's just keep doing this. You guys, look, as an instructor, one of the things that you get good at is, particularly doing it virtually, is you get good at understanding if people are getting it or not because you can't see them. So if they're giving feedback or asking questions, you can tell by the questions if they understand the topic. And I can tell that you guys do, and you're asking good questions. So excellent. Okay, so Jeff, how do I keep monkey from chasing HMOMO FOMO? Yeah. How do you keep your monkey in check in general is a whole nother conversation. For me, I give my monkey permission to do certain things, but that's a dangerous approach. I'm the first to admit that. Also, this goes back to the roundtable topic we had on Saturday about, your personal relationship with money. I'm a risk taker and a contrarian. So, to me, large bets, if I think they can pay off big, don't scare me. But for a lot of people that that grew up in poverty or have had hardship, that's really tough to do. And that's why trading someone else's money can be really useful. But the containing monkeys is a really complicated question because the cause of your monkey is really, you said right there, FOMO. If that's what the point about H momentum, high momentum, is that it's really sexy, it's exciting. So when you see it, your nervous system is going to get all fired up. That's why I track my heart rate while I'm trading. If I see that happening, I won't trade because I know I'm not going to make good decisions. My resting heart rate's about 55. My trading heart rate's about 72, 71. And if it goes anywhere above 76, I shut down because I'm being stupid. Learn to use your biology, I guess would be one suggestion.
So, Jeff, here's something, or Jeffrey, to differentiate between the other Jeff. There's one simple trick. I sound like I'm making a clickbait headline that I've developed for myself that I've found has been tremendously useful for just general purpose monkey control, is to acknowledge it out loud and address it, talk to it, say, no, monkey, I'm not doing that. I hear you. Shut up. Get back in your cage. I literally will say stuff like that. And It's silly. But for me, anyway, it's amazing how effective that was. And it's automatic now. When I sense monkey creeping in, I say something. And a lot of you, if you've been on my live sessions, you've heard me do it. It works really well. So try it.
Okay, real quick example. We have strong demand at the low of the range, and we're pushing up, and we're getting demand underneath us as we're pushing up. If liquidity joins that underneath us, the top of this range is going to go. And it looks like we're at least going to test it right now. But that's what you're looking for. That's a good to Brent's question. I'm literally watching the trade as it's approaching the edge of the range. Not that everybody trading knows there's a line there and they're going to short it or buy. No, it's just saying statistically, when we get here is where it gets the most interesting. The best fit says that is an edge and that's an edge. It may not be, it may turn out to be, but if we watch the behavior as we approach it and as we trade at it, that tells us a lot. We've got liquidity trying to get underneath us here, but it's just one. It's not a block of it. But there's demand underneath there. That's what these green, that's an emoji tool. I'm going to just turn it off for a second. It's price rejector. And all I'm doing is looking at the supply and demand on each one of the bars. And you can just see these are the deltas here. So the blue, and there was a sudden, there's where the selling came in. So see, we got right to the edge of the range and look at the delta up here. It just sucked up everybody buying. And then the sellers came back in and pushed it back down to the middle of the range. That's what happens. And it will typically do that right on the edge of the faster one because faster is what it's measuring right now. And so here now, let's scoot that over just a bit. You can see that as that plays out there. So that's a really good example of how you can watch the range real time and kind of interpret what it's doing. And you can do that on this delta only footprint. You can also do it on the 15-second footprint, just looking at the wave volume. So over here on my far right, see, we're directionally going up, kind of. The slope isn't that important, but the volume. All right, there we just broke right there. We just broke out, and now volume is picking up. See how that's going up as we leave the range? And look at it here. See, we traded up to it, and then right there, it just blew through because people tried to sell into that area, knowing it was the edge of the range we've been in, not the line there, but just by watching the trade. And you can see, look at that. They got run over the first time they sold, and now there's big aggression there, holding the line, and it's trading back and forth. And we come back into the range. This is a really good example of how to watch the edges of ranges and how to play. And here, again, I don't necessarily want to play this, because it's not really clear what's going to happen next, but it is really obvious how it's trading. I mean, I can see there's aggression here. We definitely have an inflection point. I mean, look at all the volume trading right on that spot. And it's on both sides of the tape. On that particular instance, it was on the sell side, then it was on the buy side, then we swept up. That's a puke out of that area. It's a perfect example of a puke out of a range, and now we'll probably drift back into the range, and there we go. So that's how you interpret ranges. It's not trading signals. It's what's the nature of the energy, and is this something I can capitalize on? And right now, if I was going to try to trade this, I definitely would be looking for a long here. But because we've seen a couple of pretty significant sweeps back into the range, to the downside, a long is tricky. And because you're at the edge of the range, obviously that makes the long tricky as well. So, the liquidity battle here is also telling you, yeah, you might be right, but there's a whole lot of battle going on. You could be cannon fodder in that battle, whether you're right or wrong. Look how much we're sweeping back and forth here. It's 6-8 ticks at a time as that area is litigated. It's literally an inflection point. We're watching an inflection point trade, and that's what you would see. And for example, here's the ways I would trade this. If this happened and we were above this and the energy was getting aggressive again, I'd immediately get long for a ledge break, because that would be the signals. We'd be above the high volume node, right? We'd be going that way. And again, if we can get above this liquidity and get within 10, 12 ticks, call it 30 and a quarter, that ledge will go. That's your 99% again there, Jan. Okay, so I like this as a potential long under those conditions. I don't like this short at all. It just feels very much like a short trap. I felt that all morning. There's been some big sweeps down, but I've thought of them primarily as places to look to buy this morning, not as places to sell. So, see, there's one right there. We just had a little sweep down. Again, we're at the bottom of the range. This might be a place to nibble long, but at 24, 25, it's a quarter number. It's not a good one to play here. If we push down to 20, it looked like 20 was an ebb and flow that we broke out of. So the 20 area might be a place to nibble long, which is, it's still the range. It's not the LRC range, but you can see it's still kind of the general area that we've traded off of. So that's the kind of way that I interpret this. I don't see a real good setup here. I've only done one trade in our account so far. It was just a test this morning for a tick. I haven't seen anything that just really got me excited, but this is starting to look like an interesting long going into the pre-open. Remember, we gapped down like almost 100 points, and now we are only down 53 points. So we've filled half the gap, basically. And what that looks like in equivolume, I have a toss view that I look at for that. That's this here, and it's not really trending at all. It's just kind of sitting up here. So that's the reason I'm not really excited about longs. We're kind of just consolidating. Let me show you that on this. Let's make this 5 minutes, and you'll see how, sometimes zooming out from 1 to 5 gives you a little perspective. Let's look at this within the context of Friday. So Thursday and Friday are the excuse me. So, this was the big run up into the close. There's our gap down. And, since the gap down, we've had this slow kind of painful drip up with a lot of movement and really thin volume in it. So that's why I was saying that my general bias at the moment is long, but because of all these, sweepies in here, I'm not in a hurry to trade it long, but I'm mindful of the wave volume. This is where the wave volume 1 minute view is really useful. We do have let's use the term nascent. We have a nascent trend forming here. It's trying to be a trend when it grows up, and it's doing it right at the initial balance high of Friday. And, that's significant. So this is worth just understanding this context. Just like, the structure isn't critical, but it's worth understanding what the structure looks like right now. We have UB just above us and at 32, and we've traded up that direction a few times. So, odds are pretty good. We're going to go higher. That's consistent with my idea that there's a bid under the market. The UB makes that. But, UB, it might be, 10 o'clock before that UB breaks, or it could go in a couple minutes. Looks like it's going to go right now, actually, as I say that. The criteria for the ledge break are now in play. We're above the high volume node. If we get up 2 or 3 more ticks, then I'd say this ledge is going to go. So let's watch it. Maybe we'll trade this one long. Get ready to do that. It's a really dangerous long because where you're wrong, 25. That's why, I'm not in a hurry to take this trade, but this could be an interesting trade. Let's watch it. Yeah, sweeps down. See how, so I have a good idea. The ledge break criteria here look good, but why aren't I taking the trade? Because I can't manage the risk. It's like, the odds are pretty good it's going to take out this high, but it could pull back to 25 before it does. If it does, that I'll buy. If it pulls back to 25 right now, I'll buy it in a heartbeat, because then the odds are pretty good we're going to come back up here. So a sweep down might be worth buying, but this ledge is likely to go, but protecting yourself getting long here at 30 is really hard. Maybe we can do it right now. Let's see if it really gets some quick momentum. Maybe we can get under it. Now, I'm not going to be able to get a good entry into this. I think it's just going to go. And there it goes. It tapped it. It didn't break it. There's the break. Okay. So anyway, does everyone understand why that's a really good ledge setup? And there's your 99%. But considering I'm trying to show you examples of trade, I'm being very conservative. But I was conservative about that one just because the sweep risk is so high to the downside. And I just want to really show you guys proper decision making, which under these conditions is to assume most trades will fail and be really, really conservative. But and that one would have worked nicely for 2.5 points, but the risk was like 5 points, and that just I'm just not ready to do that. Okay, I see some more good questions. Lots of good comments too. All right, let's see. Yep, liquidity magnets. Yeah, it's funny how people think of those, Charles, as support and resistance. Well, if there's buyers down there, that must mean that it's a floor. No, and this is just a common tactic in the futures world. If I put a big bid up, everyone will think that, and so there's a good chance I can get filled down there, and I really want to buy. I'm not, I really want to sell. I'm not supporting the market. That's really common. So yeah, thinking of those as magnets is important. Let's see, Tyler, I created an anchored LRC so I can track the range from a key point. Okay, you could do that. I like it to be dynamic because I'm looking at the geometry between the fast and the slow, and you can see the geometry is telling us we are accelerating up. I would caution you, Tyler, at your level of experience, to try to take what I use and has worked for 30 years or 50 years, this piece of it about 30 years, and try to make it better. That's a little arrogant, and I'm not being critical, but I'm just pointing that out. All right. Try using it the way it was designed first, and then if you can make it better, by all means, try to do that. Okay. The problem with anchoring it is, where did you anchor it? You're making a conscious decision to anchor it. And you're not letting the dynamics of the market work their own way. But that's not, again, I'm not being totally critical because that's not a horrible idea. Just be careful modifying stuff until you fully understand it. Okay, Brent says, in correlated markets, especially in the overnight, does one instrument push another instrument? Okay, correlation overnight tends to be perfect because the equities aren't trading, Brent. So there is no real difference between the NQ and the ES for practical purposes, unless there's something going on in the world that might impact, like just tech or just oil. Then that might impact the YM more than the NQ, if you get what I mean. But in general, overnights, until we start getting earnings reports and right before the open, they tend to be very well correlated, just because there's not enough information for them not to be correlated. For example, right now, NQ is leading down, and ES, they're almost identical, but everything is more or less down 1%-ish. Don't look at this and say, well, that's 0.75% and that's 1%, so that's not correlated. No, that's perfectly correlated. That's that, and the looking at the 15 seconds as they're all going exactly the same slope tells you that we're well correlated. Good question. Okay, let's see the second part of it. Some instruments will reach the edge of the LRC and trade back into the range, and another will be somewhat in the middle of the LRC. Yeah, that's more of a regular trading hours condition, that what you're seeing. And during the overnight, anything that you think you're seeing there is probably more related to the order book in those instruments. Remember, RTY and YM and NQ too, but particularly RTY and YM are really thin at night. Let's look at them right now here. Let's see. Let's close that. And so, determining anything based on that is probably not a good idea. See, look how thin it is. There's entire levels with 2-3 levels with no bid or ask at all, and then 1 contract, 5 contracts. So that's why it's just not the same type of liquidity. During regular trading hours, it's better. And oftentimes, if there's a difference in the correlation, it, as I've talked about in a bunch of examples, has to do with one major instrument. Like in the YM, there's only 30 instruments, so one instrument can skew it. Okay, we have real significant HMOMO right now, so I'm going to hold the questions and just look at this and see if we can get a trade here. I need to put the right dome back up though, so I trade in the right account before I screw that up. It's not that one. It's not that one. Come on, zoom. Stop. There we go. That's the dome we want. Okay. Oh. Very interesting spot here. Tempted to sell this right on the edge of the range, and there's real good absorption going on up here, but it also came up really aggressively. So there might be a quick short scalp here. I don't think there's a long setup. I don't think this momentum's going to continue. I'm very tempted to short this. Let's take a short, just see if we can grab some ticks. Boom. Okay, we shorted that. I put a target in at 4 ticks, and it got hit instantly. So there's our first trade. We just faded the top of a range. I did it a little late because I was kind of thinking about it out loud, but there you just saw, and that was fun. Again, those add up. That's in a mini, that's a quick $50. In a micro, it's a quick $5. And we're going to err on the side of multiple micros in this Scalpathon. So, if I get a good setup like that, I'll use 10 micros, but that one was just kind of a nibble. It looked interesting. And how long were we in that trade? 1 second. The MAE was 2, and we made 4 ticks instantly. Okay, back to the questions. Jan says, do ledges during the regular trading hours mean it's at the edge of the regular trading session? Okay, that's a great question. Any edge of a volume profile. In other words, if there's no further volume, that's a ledge. Whether it's regular trading hours or it's the overnight Globex or it's the previous session, anytime you're at the bottom or top of a volume profile, that is a ledge. Good question. Let's see. Okay, I think we covered all the questions. Yeah. Ledge is the top or the bottom of a session. And it doesn't matter what session. All ledges are important.
Yep. It just makes it so simple. Top, bottom, session, period.
Yep. And edges can occur anywhere there's a bump in the volume profile.
Yep.
Yeah. Boy, look at this pushing up again. So this is exactly why, I was very careful where I took a short, and I took it very fast for a very quick profit because, we're going up and I'm counter trend shorting, which is really dangerous. So that's why that trade you just saw, I was very careful as where I did it and how I did it and when I did it. I was a little bit late. And, but this is why the market, is still going up, although I'm not going to join this long. It's not a good long trade. It might present short opportunities, but it's getting spurted up as it takes out stops. That's what we're seeing here. Oh, we must have taken out the UB that I mentioned a minute ago. And we did. We took out the UB. Remember, it was right there down at 32. And now we're trading at 42. And we've got a cleaner top. It's not a price rejector, but it's reasonably clean for the moment. We're well above max delta, but again, at night, that's not quite as important. That's also, kind of passives, yes, but don't overthink that overnight. So, that's much more important during regular trading hours, just because the liquidity and the volume is so much larger. But it can be, again, I mentioned that UB and we did take it out, but I put less weight on it than I would put on that during trading hours, regular trading hours, where I would consider that to be more important. Okay, boy, it's 4:30 already. God, time flies.
Yep. Time to wake up.
Yeah, gosh. So I'm trying to remember my own schedule here. When are we scheduled to end this one? At 5?
You'd put it down, I think, for 3 hours, but obviously it's open to less or more.
Yeah, hang on. Let me get this back readable here.
Although actually 3 hours would get us all the way to 6 anyway, which is the start.
No, we need to do the open. Yeah, we have the Ides of Monday. Hang on, let me just get the schedule piece so I can see what I planned. Okay, I had planned it to go to 5, which is a half an hour before the Ides, another half an hour. So let's start wrapping up. Sometime between now and the top of the hour, we'll wrap up. We've covered most of the material I wanted to cover. And now I was just hoping we could get some good live trade examples and, stream of consciousness. And we just saw one good one. We caught a little scalp there. So if you have questions or comments, now's the time. We have about 20 minutes or so. I may wrap up a little earlier. Instead of taking another break, I might just end, maybe quarter of. And remember, we have the Ides of Monday at 5:30, and today's Ides of Monday will be really interesting. I'll tell you guys a little bit more about what the hedge fund guys were saying. And just, it's a crazy week. We have NFP on Friday. I mean, on top of everything else going on. I mean, we couldn't have picked a better week to do this Scalpathon. It's just, there's so much excitement. Just, don't get caught up in the excitement. Just enjoy it. I really would love to show you guys a really profitable week where we pass this combine that I'm doing for fun. But, I really want you to develop good habits from this too. So I'm trying to walk that line carefully between showing good examples of good habits and also to have some fun, make some money. All right. So there's no other questions. These are great questions, by the way. Everything you guys have asked is a really good question. You're definitely hearing the material and absorbing it. Okay, let's see. So right now there is high volume with large negative deltas, price stop. How can I interpret this situation? Yeah, what's going on here is we're in a range. So when you have a big move up or big move down, when you have a sudden move like we just have, Waleed, now we're going into ebb and flow. So that's how you should interpret it. We had a bunch of high momentum, and now we're in ebb and flow. And look at the wicks at the top of this. So there's clearly supply up here, and people are selling into it, but it's managed to run stops a few times too. We've poked through that. So we have an inflection point here, and it's two-way trading. So not a particularly good edge to play either way. This ledge break is not at risk at all. We're forming a high volume node. We're nowhere near the ledge, and there's a massive low volume area below us that we could drop into at any time. So this ledge is not at risk at all at the moment, unless something changes. If somebody jumps in and starts buying, boom, So you're interpreting that right. We're ebb and flow in a tight range near the highs. And it looks like we might see the buyers stepping up again here. So let's see. It feels like there's a bid under the market. It felt like that all morning, but when and where the buyers are appearing has been almost random. And there's one other comment that I meant to make when we were talking about high momentum and the ability, to game high volume reversals. And, we talked about the example where it's high momentum doesn't just suddenly reverse, but it kind of comes down and settles into ebb and flow, and then it starts to reverse. That's something that's a good example of what we're seeing now too, where there's a lot of energy at an inflection point, and you can't necessarily game it right away, but you can clearly see where you're wrong. And so that's the way I interpret these kinds of areas, Waleed. It's, I definitely understand what's happening here. There's a bit under the market, but there's people selling into that, and so we have an inflection point here. But if I see good places to get long, this might be an opportunity to join the previous momentum. That's kind of my interpretation right now. And, you never know if you're right or not. It's just a matter of, if what you're seeing, if the next thing that happens is consistent with what you're seeing. It's like now we're pushing down into that low volume area, and there is some liquidity right here. So again, this is not a bad spot to think about along. We're at the edge of the range. I could do it just to show you guys. You know what? Let's do it on the monkey account. I've got a monkey account prepared. Let's just do that trade in the monkey account. So I just took a long there in the monkey account, and let's see if we can catch some ticks. So boom. All right. We got 4 ticks in the monkey account doing that. So what I did was I just said, it's the bottom of the range, I should buy it, and sometimes that works, but, sometimes it doesn't. That's why I chose not to do that with any real money. But, that was a quick, 37.50. We made 3 ticks. So I'm going to leave that one on monkey for the EF. So if there's an idea that I don't really want to risk, but I want to show you that it has possible potential and what the risks are, I'm going to go ahead and trade that in the EF monkey accounts, or in the mini monkey account. And we'll trade the micros up to 20 or 30 of those with real money, and also in the eval. So let's see if I can just pick off a bunch of scalps here in the monkey account and just show you some examples. That's a good idea while we're waiting for other questions. When you're in the middle of the range, it's a good idea to do nothing. NQ is actually close to the bottom of its range, but it's been chewing up demand down there, and there's no measurable demand or supply NES right now. It's probably a long ways away. Let's see. Oh, I turned it off. Forgot about that. Hang on a second. Crap. I hate when it does that. Just reload it real fast. Hang on a second, guys. Just going to bring Sierra back up. Fortunately, it comes up pretty fast. Ooh, look at that sweep down. That again could be another good spot for a long. Um, Although this low volume area makes that risky. Okay, there, now we can see the supply and demand. Yeah, I see there's demand right there. I'm watching it. But, oh, I like here. See if we can get a fill at 35. Just trade the quarter for a couple ticks. I've got set for a 3-tick drill, so it's going to immediately put up a target of 3 ticks, and it's going to put up a stop of 6 ticks. But I generally don't even want to let it go 6 ticks if I'm wrong. So that's just kind of a placeholder for the bracket. Let's see if we get a fill on this. Okay, we're 1 tick off. It traded there. We filled. Okay, and there's the bracket, and there's 2 ticks. Can we get 3? It wants to give me 2. It doesn't want to give me 3. Probably should have taken 2 there because it's probably going to go down. Boom, we got 2. Okay, so there's another example. And that's a great way to practice, by the way, what I'm doing right now. I'm just practicing getting good entries, trying to grab 2-3 ticks, and understanding that it's a dangerous spot to trade long because we have this massive low volume node right below us. And it's kind of pushing into that. But by reading the very short-term flow, I'm seeing spots that are good to enter, and I'm grabbing ticks. Under quiet conditions, when the range is reasonably well structured during regular trading hours, you can do that exact same thing with 10 lots in ES and pick up $500 a pop, as long as you can manage risk. This scales perfectly. Again, in bold and emphasize, as long as you can manage risk, it scales perfectly. And it works in the micros and the minis just as well. I just don't want to do it in the minis with real money because the sweeps are too big. Just taking, we've seen 10-point sweeps. That's a $500 risk on a 1 lot. It's just not worth taking that. So, all right. So, Wally, did that make some sense? Or you asked me, what you could interpret right now, and I did a few examples and traded them there. Is that landing for you? You getting what I'm seeing there, and why I don't necessarily want to risk good? Okay, thank you. Yeah, not brain surgery. This stuff is. For me, it feels like common sense, but I realize a lot of it, you have to understand what you're looking for before it becomes common sense, and then it's just a matter of practice. It really is. And we're going to see so many examples over the next week. That's the whole idea of the Scalpathon, is just to pummel you into submission with examples over and over again. So, you just really get a sense of what you should be practicing. That was really my mission with Scalpathon. And by the way, credit where credit's due. CK is here. He visited me. We were doing some one-on-one stuff, coaching the end of last year. And the idea for the Scalpathon kind of came out of a conversation with him of being able to do this and spend lots of time just looking at the examples and watching how the liquidity and the range interact and how that interacts with the structure like the UB we just saw breaking. So cool stuff. So what other questions do you guys have today? We're going to wrap up, and I think I'm going to wrap up at 1:15 just so I can take a little break and JBC can take a break. He's got his pit session for oil coming up for the TRG people. And then don't forget, we have the Ides of Monday. If you're in the Scalpathon and you're not in TRG, you're a guest and you're welcome. And the links, it's slightly different. That's a calendar event, so you just have to join it. And again, I posted all of the links in the Scalpathon thread, links to Zoom live sessions, and they're sequential. Like this is the one we're on right now, so I'm going to delete that one since we don't need that anymore. And then the next one up is the Ides of Monday, and to join that, you just click there, and then we're going to see my CME first hour setups. That's the initial balance. That's where we'll get a really good idea if we could trade the range with some size. That'll be the first time, to go back to everybody that's been asking me about the ranges. That's the first place I'll trade it with some size, and I may trade NQ instead, will be for that session. So that's at 7:30 this morning till 8:30, maybe a little bit later than that. And that's what's up. And then bright and early on Tuesday morning, 2 a.m., in other words, tomorrow morning, we're going to trade oil and gold and look at the midnight oil trade, which should be really fun because I haven't even been paying attention to oil, but look what oil's doing here. Let me, real quickly, I'll make my bottom one here be oil instead of YM. And oil's been continuing to have a party in both directions. This is the oil trade. It's in a nice little ebb and flow right now. which could make the A period, the pit open, really interesting. It will break this range. That's really likely. The question is, which way will it go? Join JVC for that.
Indeed. By the way, real quick, so Jan had a question, and I gave my thought on it, but I'm sure you have much more nuance with it because you've got a lot of time with NQ. But he was wondering why you don't trade NQ overnight. And my thought was, well, it's crazy thin, but I'm sure there's other things too.
Yeah, the only time I'll trade NQ is if there's something going on in the world that directly impacts NQ. One example I can remember in the last decade or so, one of the big chip foundries, Global Foundries, big Korean company, had a problem with one of their plants. I forget what it was, and that happened during the overnight, and the NASDAQ reacted really violently to it, and the ES less so, because all the chip people are in the NASDAQ and some of them are in the S&P 500. So that's a simple example. But otherwise, I trade the ES because it's the one that isn't thin. That all of the other markets are absurdly thin at night. Like I just showed you, you can have gaps of 3-4 ticks that have no bid or ask at all. And that just makes trading really, really complicated in a way you don't need it to be complicated. You're better off, trading something more predictable. So. Absent that exception, without there being some reason that one of the other indexes might be impacted, I tend to focus on ES. But up until about now, this is the pre-open now, just to be clear, the kind of segments of time, the overnight is from, the Globex open, which is, when we restart at 5 o'clock Central. And I consider the overnight to end at 4 o'clock my time. So about 40 minutes ago. And now we're in what I call the pre-open. There's a lot of economic news comes out, this time of day, and a lot of earnings reports. And so the pre-open can often be volatile, and there can be some great trades, but you just have to be mindful that there's news and information coming into the market now, as well as bigger traders are starting to join us as the volume picks up going into the open. So it's a tricky time. We're going to spend a lot more time talking about the pre-open in other sessions. Again, just real quickly to bring up the calendar, I'll show you when and where we're doing those. Come on, stay where I put you. Okay. All right. So tomorrow, this is the one we're doing now. Tomorrow, we're going to start earlier and go to the same. Say we're going to be another hour longer, and we're going to talk more about the equities pre-open after we do oil and gold. And so that's going to happen there. And then we're also going to do that when we talk about the open 5 right before the open, because that's part of the pre-open. And then we will do that again on Thursday when we talk about the pre-open and open specifically. So that's the topic for Thursday all by itself. But we're going to kind of touch on it in some of the other sessions. It's that important. So, and what this is about is time of day. Conditions change during different times of the day. And a setup that works really well in the middle of the night might not work at the open. And, there's countless examples of that. So, I'm always mindful of, what time of day is it? And is there anything coming that could impact the price? Is there any new information that I expect to enter the market? Economic release, earnings, whatever. ES is so slow overnight. Slow is good. Yeah.
Exactly.
That we've talked about that. A slow range is exactly what you want. You're not looking for excitement. You're looking for predictability. So if it's slow and just plodding along, let's say it's plodding along in a move, that's the perfect to just try to trade the bid ask. We're moving around too much to do that now, but I'm hoping I'll get a chance to demonstrate that. When the market is really quiet, it's just moving around a couple ticks at a time. The trick is just to put a limit order in on one side, get filled, and then immediately take a tick on the other side. You can do that with a 100 lot all day long. 100 lot probably a little bit much. Certainly a 10 lot without impacting the market. So that's what you want. That's why ranges are so good. Momentum and high volume reversals are exciting, but ebb and flow is actually the most profitable type of price action. And it's hard for newer folks to burn that in. It was hard for me to burn that in. It took me decades to really understand that. I was always drawn to the excitement because, like everybody else, I'm high energy and I want to trade, and that, you have to control that. It really.
Well, and we get it drilled into our head that you can't make money unless it moves a lot.
Right. Exactly.
Far. And
that's the whole trend trading thing. Yeah, exactly. And it's important to understand the statistics about this too. Markets trend typically 15% of trading days. So, if there's 100 trading days in a period, 15 of them might trend. That's typical statistics. So the rest of the time, it's going to be in some sort of range, and you're going to have to trade the range. If you're just waiting for trends, which is what most indicators do, they're trend following systems of one kind or another, Renkos and all those, funky types of analysis, what are they? They're all about trend. And the problem is most of the time the market's not in trend, which is why those people get chopped up so much. Markets tend to be range bound, and ranges are not quiet. They're actually great. They're predictable. And we're seeing that right now. The range, it's expanding down a little bit, but it's predictably doing it. Look at how orderly the drift down is here. Let's just look at that. As it is chewing up supply up here and drifting into the demand, trading away from it, and then drifting back down, just forget the emoji tool here for a minute and just look at the deltas on here. And it's really obvious what's going on. You can see it. Look at these big spurts up those are wicks. That's what wicks look like. They found lots of sellers up there that were willing to accept every buyer and sell to them. And that's why we turn. So if you're seeing that happen, that's a great spot to grab a high volume reversal anywhere in here. Even if you're just targeting here, you're going to get it because that's what's happening. So and then we traded down. This was HMOMO. Then we traded down, and we see the buyers stepped up down here a little bit. So that popped us up. And then we traded down again. And again, right there, you can see the buyers stepped up and pushed us back into the range. We're just working this range. And you can see the energy as it's ebbing and flowing into the range. And so this is actually the stuff you want to trade. All the magic indicators can't find a trade, but we could trade this all day long. So and we will do more of that. It's just we're getting toward the end of this, and I'm getting a little tired, and I have 3 more sessions to do today. So I'm gonna pace myself just a bit.
Break time.
Yeah, it's definitely going to be break time. So anyway, Burning Desire is going once. Any questions, comments about anything we covered today? Are you guys learning? Is this cool? Are we getting, judging by the questions, you guys are really getting it, and I'm excited to see that. The VIX is a piece of that equation, Charles. We'll talk about that when we talk about the open, when we look at internals, but it's not a critical piece. Cool. There's always the DAX. Yeah, exactly. All right. I don't see any other questions. Let's go ahead and wrap it up. So thank you, everybody. We will see you at the Ides of Monday at 5:30. And then if you're TRG, JVC's 6 a.m. pit open for oil, and then my 7:30 initial balance. We'll see everybody for that. Have a good morning between now and then. Get some coffee, get some water, take a break, run around the block. Thank you, CK. Thank you, Elena. Appreciate it. And we'll see everybody later. Thank you. Thank you, Charles. Appreciate the feedback. Really do. As always, thank you, JVC. Appreciate your help. We'll see you soon.
You're very welcome. Bye, all.